Perfect. Um, all right. Well, I'm excited for this webinar where we're going to talk about all things insurance and kind of like protecting your income for doctors. And it's sort of like the best offense is a good defense. The first step you need to set up is um, protecting your long-term ability to earn income. And so with Larry, who was the very first partner that I had with Prudent Plastic Surgeon years ago, and is just like I was just saying, like a walking encyclopedia of insurance, and it honestly is just one of the good guys in this field and the whole kind of field of personal finance for doctors. So I'm super excited to have him here sharing his knowledge and talking to us about really kind of the basics of what we need to know to make sure that we're adequately protected. There is a lot of misinformation out there. There's bad actors and things like that. And Larry has really committed himself to educating, and this is an exciting part of that. So, with that said, thanks for those who are joining live. For those who are watching the recording, thank you. And Larry, thank you for being here. I'll let you kind of take over.
No, that sounds great. No problem at all. And again, this is really just designed to be educational and really give you an idea of not so much becoming an expert, but where your spider sense should go off, that something just doesn't sound great. And you never have to be an expert in this. I tell people you don't even have to rely on an expert. You have to be involved, much like patients are involved in their care. You really have to advocate for yourself. But if you know the right questions to ask, no one's going to know you better than you, right? So I can ask you tons of questions and I could try to figure out what your personality is and what makes you tick, but you're going to know that better than anybody else. And as a result of that, with my education, training, and experience, that should lead you to the plan that works best for, you, your family, your budget, and your individual circumstances. So if I go out and I share my screen here, I'm going to go ahead and I'm going to start this, really from the beginning. And I've cleverly, called this disability insurance planning because, like, what else would you call this? And I've got, the fact that it's a prudent plastic surgeon, and away we go. Right. So you've got your group disability insurance plan. Most people, even residents or fellows, are going to have a base level of coverage that's provided to them. And we really know even the best laid financial plan might not work. And one of the reasons it might not work is if someone becomes too sick or hurt to work. And that's really where disability insurance comes into play. So at the end of the day, I'd like to think we love what we do. Your alarm goes off, you're excited to get to work, you're excited to make a difference in somebody's life. But at the end of the day, we also happen to be well-mannered, well-educated money-making machines. And if an accident or a sickness takes away our ability to do that, our financial plan might come to a screeching halt. And really, disability insurance is nothing more than income protection. So you might hear it referred to as that. So let's say we look at our typical group insurance plan. It's going to cover a percentage of your salary up to a maximum monthly benefit. Benefits are generally taxable to you. So if you're getting this from the hospital or your employer and they're giving it to you at no cost as part of your benefits, we know that if you're disabled, those benefits are generally going to be taxed. Now, they might not be if they're telling you, Jordan, I'm going to add to your taxable income the premium that we're paying on your behalf. At that point, you're effectively paying the premium and the benefits would be income tax free. Most of the time, the benefits are going to be taxable. If you see something on your pay stub that says LTD, long-term disability, there might be a star there that says imputed income. That's going to tell you that the benefits are income tax free and the premium is added to your income. Well, typically these plans only cover your base salary, so no overtime, no incentive pay, no bonus pay, no shift differential if you have that. Typically, the policy is not own occupation. So physicians know the term own occupation. People in my industry that sell group insurance know the term own occupation, but that means different things to different people. Right? Typically, when I talk about own occupation, it means if I'm disabled and I'm a plastic surgeon and I can no longer perform those job duties as a plastic surgeon, full benefits are going to be payable to me. It doesn't matter how much money I can make, doesn't matter how much money I do make in another occupation or another medical specialty. Well, typically, group insurance is not that way. And it says, in addition to being unable to do one or more of your job duties, you are required to have a loss of income of, let's say, 80% or more. Now, if you're earning a substantial income, maybe that's okay. But most physicians, most high income professionals will say, I understand that this is my group plan. It's part of my coverage. It's not my foundation of my coverage. I'm not going to rely on this. Now, it's likely subject to something called ERISA, and this stands for the Employee Retirement Income Security Act of 1974. Just know that the claims process is very different on a group insurance plan than it is on an individual plan. But the nice thing is generally it doesn't require medical underwriting, so there's no medical questions if you're going in during open enrollment. It doesn't ask you about hazardous avocations like rock climbing, hang gliding, motorized racing. So if you do any of that stuff, it's probably not a bad thing to have. Like I said, you don't want this to be the foundation of your coverage, and typically this is not going to be portable. And a lot of physicians and professionals, for better or for worse, they actually change jobs. So this might not be your ideal protection. So then you've got your individual coverage. And typically this will replace 60% of your income. But one thing a lot of physicians and high income professionals do not realize is that the income replacement ratio drastically decreases as your income rises. So first world problem, I'm making 100,000. I could typically get $5,200 a month of benefit. If I'm making 300,000, it's not 5,200 times 3. If I'm making 500,000, it's not a multiple. In fact, if I was making 1.25 million and I had no other coverage, I'm going to get up to 30,000 a month. That's a far cry from a 60% replacement ratio. But the benefits are typically tax-free because you're paying for your own. We've got special limits. So if you're a resident, fellow, or new in practice physician, we don't care about your income. We also don't care about your group insurance coverage. And you could typically purchase somewhere between $5,000 a month and $8,500 a month of benefit. Guys, this is not what you're paying to the insurance company. This is what you would receive if you were disabled. Guaranteed standard issue plans might be available. We're going to spend some time on this. This is where big mistakes are made. And the policy, it's portable. You own it. It can be increased. You take it with you no matter where you go. If you happen to be in California, you'd really want to avoid that if possible. If you're early on in training, there's really not much you can do. Like, I'm not going to tell you not to buy your disability insurance because California is the most expensive state to buy. But I will tell you, if you're at the very end of your training and you've gone this far, I don't know, maybe you wait, or maybe you buy an individual policy. And if you know you're getting out of Dodge, you look to replace that when you go to a state that's viewed more favorably. So what do you need to know? Well, you need to know that you're better than a spreadsheet, right? A spreadsheet is a tool. So Jordan talks about disability insurance and financial wellness. I do the same. We talk about your most valuable asset is your ability to earn an income. So let's say you buy into this and you're like, you know what? These guys seem to make some sense. I'm going to go and I'm going to do what I normally would do when I research things. I'm going to go to ChatGPT, or I'm going to go to Google and I type in disability insurance for anesthesiologists. Or maybe you say disability insurance for anesthesiology residents. And you go right to a spot that's probably a sponsored link, and it asks you to input your information. Name, date of birth, your income, do you have group insurance? And then lo and behold, you get a spreadsheet, which is typically the carrier's logos, minimal information, and it's designed to have you make a decision quickly with minimal information. So what's the problem with this? The problem with this is a spreadsheet is going to contain information that I think you think is important. And unless I know something about you, what I think is important and what you think is important might be completely different. So if you don't know the right questions to ask, you're going to look at this spreadsheet, you're going to go to what you know, which is price. And you're not going to look for the most expensive one. You're going to look for the least expensive one. And you might say, well, the least expensive one is the best because it's the least expensive. Okay. You might say, I'm going to buy the most expensive one because it's got to be the best. That might not necessarily be the case. So if you request a disability insurance quote and you get a spreadsheet, I will tell you the first thing that you should do is run. You want to get illustrations of coverage that were designed in the illustration software that the insurance company provides. Everything else is designed by an agent. There is no approval. It becomes the Wild West. Who are you talking to? So for those of us that are old enough to remember the movie, like Taxi Driver with Robert De Niro, you talking to me? You talking to me? You better know who you're talking to. There are a lot of people out there that profess to be financial planners, yet they do not have the licenses to allow for that. They do not have the certifications to allow for that. Well, if you are a resident or a fellow, if you fall asleep after everything I say beyond this, there are two questions you need to ask anyone when you're looking at disability insurance. Here's number one. Hi, Mr. or Mrs. Agent, do you know of or do you have access to something that is exclusive that you can offer me, like a discount or a guaranteed standard issue plan? If the answer is yes, you're talking to the right person. If the answer is no, you have to go to question two. Well, Jordan, I see you answered no to the first question. Do you know of something, even if you cannot offer it to me, in the way of a discount or a guaranteed standard issue plan? If the answer to that is yes, then you have to say, can you give me the name, email address, and contact information for that agent? I'm not telling you that that is what I'm going to buy, but I am telling you that I need to take all these things into consideration before I make my final decision. That is completely reasonable. We will see later on. The reason this is so important is general rule is if you apply for disability insurance on a medically underwritten basis where you're answering medical questions, they're reviewing your prescription drug history, they might be reviewing your medical records, and your application is declined or modified, like they'll offer you coverage with an exclusion rider for a specific body part or medical condition, or your agent tells you the Titanic is going to sink, you need to withdraw your application. In most cases, you have now become ineligible for the guaranteed standard issue plan, which is kind of like your Willy Wonka's golden ticket to get coverage within 24 to 48 hours with minimal or no medical questions. Well, we need to know about the big five. These are the companies that provide own occupation coverage to physicians. There's more than the big five, but the five are the ones that are most notable. And to me, finding the right disability policy literally is as easy as one, two, three. So what do we look for? And we'll go through these pretty quickly. Non-cancelable and guaranteed renewable. They can't take it away. They cannot change the premium rates. You can get rid of the insurance company. They can't get rid of you. You want to make changes, you can go ahead and do that. The insurance company cannot. So imagine if I was a private practice plastic surgeon and I'm trying to lure Jordan away and he comes to interview me. And I'm like, Jordan, I'd love for you to join me in my practice. Just tell me a little bit more about what you're all about. And you're like, look, here's my terms. Once you hire me, you can't fire me, but I can quit. Once you give me my salary and you give me more money, you give me a raise, you can never reduce my salary. You can only increase it. I'm like, boy, this sounds like you're going to be a great partner for me. Where do I sign up? Well, that's basically what the insurance company is allowing when you have a non-cancelable and guaranteed renewable policy. Beware, certain agents will show not non-cancelable and guaranteed renewable. They will show a guaranteed renewable only policy. And that just means that the insurance company has the ability to change the premium with state insurance department approval by class of policyholder. So if you see a policy form that says GR without the NC, be aware that the premium rate can change, and it's probably something you don't want to get involved in, especially if you're early in your career. Own occupation definition of total disability. We're going to talk about that.
I
Residual or
want the chicken.
partial benefits. Fire away. Any question jumping out? I thought I
Uh,
heard,
Morning.
thought I heard a question there.
yeah, this is Alan. But I would probably have to talk to you. So basically, the GSI is you're ineligible if you applied for the Big Five in the past and were denied. Is that
Uh,
correct?
it depends upon when you applied and which company is offering the GSI plan at your hospital. So I'll go through that. Hopefully, I'll answer your question. Otherwise, we can certainly talk offline, no problem at all.
Thank you for your time. Bye bye.
Got it. So we've got the residual or partial benefit. Own occupation is great, but the problem is if you're still doing your job on a limited basis without a residual or partial or loss of income component, you might qualify for no benefits whatsoever. So we need to rectify that. Recovery benefit, I'll use plastic surgery again. It's one of my favorites. If you're an aesthetic plastic surgeon and you've got VIP patients coming in and you're taking them in through the back door and the VIP entrance, and they find out that you're disabled, are they coming back? Probably not. They might say, Jordan, like, you knew my facial anatomy, you made me look phenomenal. But now I don't know when you're coming back, and I'm starting to look like Droopy Dog. I'm going to find another plastic surgeon. So now you do come back, but your practice has been decimated and you have to rebuild your practice. It could take you years if you went down at your prime. Some policies have a recovery benefit where, as long as you have the loss of income that's required and it's due to your prior disability, they're going to continue to pay you, potentially to the age of 65 or longer. Some companies do not have this, and they might stop paying benefits after 12 months. So imagine you go down at your prime, you come back, it could take you years to rebuild your practice. And if they're like, look, you should have read your policy a little bit more carefully, like we just gave you, check number 12, we're done here. And you're thinking, I thought you were taking care of me financially. It doesn't seem that this is the case. And they say, well, you should have read your policy a little bit more carefully. You don't want to find that out during your claim. You want to know what's going to happen prior to a claim. We'll talk about the cost of living adjustment and then the future increase option rider or the benefit purchase rider. This allows you to buy more coverage in the future as your income rises. So true own occupation. Here's your legalese. You're unable to perform the material and substantial duties of your occupation. These are the things that cannot be reasonably omitted from your job and allow you to do this the way you did before, right? So it's based upon the duties you were doing immediately prior to your disability. You don't have to call me or the insurance company to continually update us with a change in your medical specialty. Like if you bought your policy when you were a PGY1 in general surgery, and now you're a pediatric cardiothoracic surgeon, you don't even have to let me know. Like the time you will let me know is when you're increasing your coverage. It's going to be on the application. If you're filing a claim, it's going to be on your claim for benefits. That's really about it. Otherwise, we just need to know what you're doing at the time that you're buying the policy so we know where to classify you. Well, this says if you become totally disabled from your regular occupation and you choose to work in another occupation, you'll get full benefits regardless of the income that you earn from the other occupation. Like that is your quintessential own occupation definition. Well, your big five is Berkshire. You can use them, Guardian, it's interchangeably. The Standard, Mass Mutual, Principal, and Emeritus. That's really your big five. To that, you can add Northwestern Mutual. Now, Northwestern Mutual is a good insurance company, but I will tell you from September of 1997 until December of 2022, they did not have an own occupation definition if you were a physician. They had something that sounded like own occupation, but it wasn't. And if you were disabled out of your medical specialty and you chose to work and you made income doing something else, even if it had nothing to do with medicine, your benefit would be reduced or potentially eliminated. They've rectified the own occupation issue, but they have not rectified the recovery benefit. And then you've got New York Life. A couple of years ago, they came out with a product. It's fairly expensive, much more expensive than everybody else on the board. So if you have that, do some comparison shopping. Look at what you've got, look at what else is available. Well, Guardian went one step further. And they came out with something, if you're an MD or a DO, it's built into the policy that they call the enhanced medical specialty definition. So let's say you are none other than a plastic surgeon, and you happen to be Jordan Fry, and you're a very entrepreneurial guy. And you're like, Larry, look, I do not only plastic surgery, like I do microsurgery. I'm in the OR hours at a clip. I'm doing microsurgery. This is difficult stuff. But I learned early on, like I need to supplement my income. As great as plastic surgery is, I can extend the length of my career by having a side gig. And I'm going to teach other physicians how to handle themselves financially so they can extend their careers. So now you file a claim and you say, God forbid, I'm disabled. I've got an essential tremor. I can no longer work as a microsurgeon. And they're like, well, Jordan, that's great. We're so sorry to hear it, but is there anything else that you're doing? Oh, yeah, well, I run the Prudent Plastic Surgeon blog, and I've got a bunch of income coming in from that. And they come in and they say, well, Jordan, the way we view this is you have two jobs. You're a plastic surgeon, like we don't debate that, but then you're also a professional blogger and you're earning income from that. So you've got two jobs and you're telling us that you can't do one, but you can still do the other. Well, the issue becomes is if you take all of the time that you were working as a plastic surgeon and now you devote that to something else, or you take on even another side gig, and you no longer have the requisite loss of income to even get partial benefits, your benefits stop. And the insurance company might say, today is a great day for us. And you might say, today is a terrible day for me. So what Guardian did is they said, Jordan, before we tell you that you're partially disabled and you could potentially have your benefits eliminated, let's take a step back. Prior to your disability was more than 50% of your income derived from performing invasive or surgical procedures. And then we go on to talk about this. And, typically over the prior 12 months, you've made an incision. Well, yeah, you're doing that as a plastic surgeon. Typically, respiratory assistance is required, and typically anesthesia is being used. If that's the case and you meet that more than 50% test, you are deemed totally disabled. Full benefits are payable. You can do 100% of your job of blogging. You can make as much money as you want. It does not matter. The same thing is true if you're in a hybrid medical specialty. So let's say you were a urologist and a urologic surgeon, and 60% of your income came from urologic surgery. You can no longer operate, but you stay in the same practice. You're just doing general medical urology. Well, hey, if more than 50% of your income was deemed as a result of performing invasive or surgical procedures, you could stay in that practice, do general medical urology, make as much money as you want, and you are deemed totally disabled and you get your full benefit. And for your non-surgeons, we have another definition that says if more than 50% of your income was earned from performing hands-on patient care, where you're interfacing with a patient to diagnose and treat them. So if you had a clinical practice, but then you also had administrative duties, and maybe you were lecturing for a pharmaceutical company or you were running a medical spa and you were a medical director and you weren't even seeing the patients, you were just overseeing the mid-levels, well, that could be the difference between getting a full benefit or a partial benefit. So for the right situations, this can really be a game changer in terms of the way a claim is viewed. But you need to have a residual or a partial benefit too, because this takes away, like I said before, the all or nothing of a claim. Many disabilities are gradual and they're not immediate, maybe trauma aside. Generally, it's a percentage of income that's lost is equal to the percentage of benefit paid. It's a proportionate benefit. If your loss of income is greater than 15 or 20%, this is typically the trigger for a partial claim. You don't really want to strive for this, but if you have a loss of more than 75 or 80%, this is going to give you your full benefit for that particular month. And then that recovery benefit is even after a period of total disability, if you return to work with no restrictions, you're still going to get benefits as long as you have the required loss of income if it was resulting from your prior disability. That's really important. If you do not have a residual or partial benefit on your policy, it's all or nothing. It's like pregnancy, like you're either in or you're out. And some physicians in certain medical specialties will try to convince me that they're either doing their job or they're not doing their job. When I first started doing this, they convinced me, oh, I'm an ER doc. I'm either in or I'm out. Now I convince them, well, what if you could still do emergency medicine, but you have to work fewer shifts or fewer hours per shift? Well, if you don't have a residual or partial benefit, and maybe you don't meet that Guardian more than 50% loss of income threshold, you might have a significant loss of income and you walk away with no benefits from your policy. Cost of living adjustment rider, really nothing sexy here. The younger you are, the more important this is. The more career horizon you have, the more important this is. This just increases your benefit after disability has lasted for 12 months. It could be tied to the consumer price index. It could be a fixed percentage. In certain states, it could be simple interest or compounded. But the walk away here is if budget's an issue and you don't think you're going to increase your coverage shortly after buying your policy, consider just buying a larger policy and forgo the COLA rider altogether. So sometimes I'll have someone that qualifies for 15,000 a month and they tell me, you know what, I'm good. I'm just going to buy 12,000. And I'm like, well, look, if you're going to buy 12,000 with the COLA, let's see what 14 or 15 looks like without it. And then I can pretend that I'm a real financial planner, right? I can pull out my time value of money calculator. I can look at, assuming a certain rate of return, how many years do you need to be disabled before they cross over? And at that point, if you're like 8 years, man, that's a really long time, buy the bigger benefit without it. If you're like 8 years, like I trained for longer than that. Like it seemed like it was forever, but it went by quick. Then buy a smaller benefit with the cost of living adjustment rider. There's no right answer. I don't have the crystal ball like anybody else has no crystal ball. So we wrap up a little bit here is other than price, because that's easy. What should I know? Well, how are claims handled for mental/nervous and or substance abuse disorders? How are claims handled if I'm disabled and I choose to reside overseas? If you are a visa holder and you don't ask how this impacts your policy, you are leaving a potential monstrous benefit on the table. And what type of increase option do I want on my policy? Some companies offer two different types of increase options. Some offer one or the other. And like I said, you're going to know yourself better than I'm ever going to know you. That is going to be a factor that could potentially impact what you ultimately decide. So mental or nervous conditions. Well, with the exception of something like emergency medicine or pain management or anesthesia, or people that live in California, every policy in California has a limitation for these types of claims. Principal also has a similar limitation in New York. Jordan, they tell us that, we're the next California in New York. Who knows? But basically, they'll give you 2 years, either over your lifetime or per episode of disability for psychiatric-based claims. So anxiety, depression, stress, chemical dependency, drug addiction, burnout. Some companies will give you the choice not to have the limitation. And if you do that, you're giving up a 10 or a 15% discount. Certain specialties have no choice. Other ones have a choice. Just know what makes you tick. The really bad stuff, like dementia as a result of a stroke, a trauma, a head injury, viral infection, MS, Parkinson's, that's not going to fall under this limitation. So even if you have a limitation, it's not going to apply to those things. Here's my visa holder. In the majority of states, and I listed the ones that it does not work in, God forbid, you're a resident in the state of Connecticut and you're disabled and you lose your sponsorship. And as a result of that, you need to return to your country of citizenship. The majority of companies are going to either pay you no benefits at all, or they're going to be very limited, typically 12 months. And after receiving benefits for, say, 12 months, you have to get back to the United States. Well, the question is, how do you get back to the United States if you've lost your sponsorship? It's probably not going to happen. So if I tell you that you're going to get benefits for 12 months and then your benefits are going to end unless you can magically get back to the United States, that's a potential problem. So Guardian has a policy and they're going to add, and they call it an exclusion rider, but it doesn't read like one. And it essentially says, well, Jordan, if your disability started in the United States and now you lose your sponsorship and you need to return to your country of citizenship, with few exceptions, those states, we're going to continue to pay you on an ongoing basis. And if you happen to be traveling, you were visiting family members outside of the United States, and your tickets to leave and your tickets to return happen to be within 31 days, that's your intention, and you're disabled outside the United States and you cannot return, that's considered incidental travel, and you could still receive benefits overseas with no limitation. That is a monstrous benefit for people in that situation. Yet I review policies every single day. One of the first questions I ask is, are you a U.S. citizen? Are you a permanent resident, or are you a visa holder? What is your country of residence? What is your country of citizenship, and what is your state of residence? You'd be shocked how many policies I find are not going to pay foreign nationals anything more than a very limited benefit. And that's just, lack of knowledge on the physician's part and lack of knowledge on the agent's part. Well, we won't go into big details on here, but there's two types of increase options. So I don't know, I'm a little old school. I didn't use an iPad to study. I didn't even use a computer. I literally used index cards and I wrote in big letters, future increase option rider, and I would take my Sharpie and I would say FIO. And I'd be like, well, what is FIO? I know what it means, but what does it do? Just know the F stands for freedom or flexibility. You're paying for the FIO rider itself, right? That's a negative. But the positive is every single year you have the ability to buy more coverage. You have the ability to decide if you want to buy more. I can tell you what the maximum is. You could tell me you want some of it, all of it, or even none of it. Because you're paying for this option, you cannot lose it. Hence my freedom and flexibility. But there's a new one in town. We call this the benefit purchase rider or the benefit update rider or the benefit increase rider. Well, the same way I was clever and I came up with the F in future increase option stands for freedom and flexibility. The B in benefit purchase, benefit update, or benefit increase rider stands for you better do something. And here, every 3 years, you are required to check in with the insurance company. Now, I have a staff member where her entire existence is chasing after my 3-year check-in people. And she's like, Jordan, we're coming up on your increase option. You need to send me a recent pay stub. You need to send me a copy of your tax return and your W-2 from last year. If we don't know where you're working and we don't have other clients there, I'm going to ask you for a copy or a summary of your long-term disability benefits. If you follow our instructions, which we kind of force you to, you're going to send that back to us. We're going to put your application together. Very easy. Who are you? Where do you work? What have you earned so far this year? What did you earn last year? What do you do? Do you have any other disability coverage? Surprise, surprise. That's the reason we asked you for all that stuff. Now it goes to the underwriter. They don't ask medical questions. They're not looking at your prescription drugs use. They're not looking at your medical records. All that they're looking at is, does this individual qualify for more coverage? If the answer is no, we're not looking to make you a walking moral hazard where you can make more money as a disabled individual than if you actually continue to work and practice medicine. So no harm, no foul. You check in, we don't offer you anything, your benefit stays the same, your premium stays the same. We'll see you in 3 more years. Here's the rub. If you don't check in at all, after multiple attempts from my office and ultimately me, if your increase option is removed, in some cases, you can never get it back. And in order to buy more coverage, you have to go through the whole process again. And now you're older. All right, we can't fix that. We can make you look younger, but maybe you've got some medical issues that have now developed since you bought the policy. That can be really problematic. The second part is, let's say it's good news, bad news. Jordan, great news. You're earning a lot more money. You have 5,000 a month you bought when you were a resident. You're eligible for 15,000 a month. You can have another 10,000 if you want. How much do you want? Ah, well, is there a minimal I have to buy? Well, with this, there is. You have to buy at least half of what they offer you. If you do not, it's as if you never checked in and you're going to lose your increase option. Hence the better do something. So if you don't like to play by the insurance company's rules, or you feel you could become a victim of your own success, and that they're right, you probably do need more coverage, but the timing for you to buy it is not now, you might want to take a pass on this and only focus in on the companies that offer the future increase option or the FIO rider. Like I said, California, most expensive state, limited policy choices. Generally, provisions are less liberal. If you plan to move there, evaluate your options before you get there. And if you're there now and you're getting out of Dodge, consider either waiting or buy your policy to protect yourself. And then if you leave, reevaluate. Well, everything I said so far is if you're in good health. And this is going to answer Alan's question. So there's something called guaranteed standard issue coverage, where there's either no medical questions or very limited gatekeeper questions. But like I said, if you're offered a modified policy or a rated policy where you're paying more, like they call this a substandard premium, or you were declined, you can easily become ineligible for what was a guaranteed standard issue plan. So why would this happen? I know none of you guys do this if you're in medicine, self-prescribing or peer prescribing. Well, I don't write the scripts for myself, but my spouse does. And I'm like, oh, are there any medical records that go along with this? Because it showed up in the prescription drug check. Well, Larry, you know that my spouse prescribes that. I don't see him or her officially. They just write the script. It's easy. And I'm like, well, if it's something other than like a Z-Pack, you're going to get declined for this because we don't know what we're getting. If you're currently pregnant or you have a history of pregnancy complications or infertility and you're going medically underwritten, you're going to get an exclusion rider, no coverage for pregnancy, complications of pregnancy, or infertility. I don't know any medical professionals that have ever been diagnosed or treated for stress, anxiety, depression, ADD, ADHD. Medically underwritten, you're going to get an exclusion rider, no coverage for psychiatric claims. Diabetes or pre-diabetes. Well, my diet's horrible. All I do is I eat whatever I can get out of the machines in between cases. Well, if it's in your medical records, that's going to be a problem. Like diabetes is literally an instant decline with the exception of a GSI plan. I had a recent needle stick. I didn't have a negative HIV, Hep B, or Hep T, or Hep C test 6 months post-exposure. You're going to get an exclusion rider for blood-borne pathogens until you can produce that. If you had recent surgery or surgery where hardware was placed, I'm an orthopedic surgeon. I love orthopedics. I went into orthopedic surgery because I had my shoulder repaired. Well, that's all right, but if you got pins, screws, and anchors in there, you're going to get a permanent exclusion rider on that shoulder. History of cancer, treated by a chiropractor, is what a lot of my clients tell me, a free massage. It's not so free when we look at the chiropractor's medical records. It usually says degenerative disc disease, chronic, back pain. That's going to get you potentially even declined. If you've got psoriasis or even worse, psoriatic arthritis. Psoriatic arthritis is now going to get you an exclusion rider for psoriasis or arthritis, a 50% extra premium charge, a 5-year payout for anything, and no increase options. Diagnosed with sleep apnea or another sleep disorder, that's pretty much going to be a decline if it's recent. Or you're diagnosed with ulcerative colitis or some type of illness related to that. That's going to get you an exclusion rider and an additional premium charge. So here's our GSI plan. No medical history questions. Maybe gatekeeper questions. BMI doesn't matter. Too high, too low, we don't care. We don't even ask. Hazardous activities are not taken into consideration. Certain states will ask. We don't care about the answer. Here's our big thing, Alan. May not be available if you were previously declined for individual coverage, you were offered a modified policy, or you withdrew a pending application. So, like I said, those two questions you gotta ask. Do you have access to something that's exclusive for me, like a discount or a GSI plan? If you're not my person, who might my person be? Please give me that contact information. I'll use Guardian as an example because right now they have the most GSI plans. If you applied for disability insurance on a medically underwritten basis when you were finishing med school, you were so excited that you matched. I got a future to protect. I better do this. And I'm going to make this up. You went to school in Albany Med, you matched at NYU. You applied when you were still at Albany Med, like the day after that you matched. You got declined because you had a medical issue. You now start your residency at NYU. I call this the Vegas rule. What happens in Vegas stays in Vegas. That decline took place when you were in Albany Med. Before you got to your residency at NYU, you are still eligible for the Guardian GSI plan. The second one is the 9-month rule. So you didn't know you were going to NYU. You didn't know anybody at NYU. You got there. You decided you better get some disability insurance. 3 months into your intern year, you apply and you're declined. Well, because that decline took place within the first 9 months of your hire date at NYU, let's just call it July 1st, anytime up to March 31st, even if you apply 4 years later for the GSI plan, you are still eligible. And current date, if it's a Guardian GSI plan and you were actually declined by Guardian or offered a modified policy, or you withdrew an application, you are still eligible for the Guardian GSI plan. They actually take their own. Many of the same benefits of a standalone policy. It really is. The policy is portable. And the only drawbacks to it, if you call them drawbacks, is the maximum benefit is $15,000 a month. And it has to have a 24-month mental nervous substance abuse disorder limitation. And like I said, some medical specialties are required to have that anyway, and the state of California requires that. So GSI, since these GSI plans are exclusive to a particular agent, guy like me, I'll use NYU as an example, or a group of agents, potential clients are encouraged by, guess what, non-endorsed agents, because they don't have access, to apply medically. They don't even tell you that the GSI plan existed. Now you find yourself ineligible. You find out about the GSI plan after the fact, and you call someone like me. And in most cases, few exceptions, I'm going to tell you you're ineligible. You are now furious that you had a golden ticket that you could have taken advantage of, and now you're no longer eligible for coverage. That is absolutely heartbreaking. Cost of a GSI policy is the same or less compared to a fully underwritten policy if they're structured the same. Sometimes you're going to hear, even in well-known websites, GSI policy is almost like a second-class citizen. Buy the GSI plan first, lock it in, and then go shop for a better or cheaper policy. That is horrible advice. And we love to do studies in insurance, just like you guys like to do them in medicine. And every year, Milliman does a study of the disability insurance market. So last year, 2024, 100% of the applications came in. 53% of the policies were either modified or declined. 34% was modified, like that's no small number, and 19% were declined. That's almost 1 in 5. So can you imagine? I'm not a gambler. I would say most insurance agents don't gamble. Like I bet on sure things, like I consider myself that in my profession. But people race to Vegas to go play blackjack because the odds are basically 50-50. Well, if I told you could play, but the odds are 53% against you and 47% for you, why play when you've already won the game? The GSI plan is available to you. Take it and run. If you need more than $15,000 a month, supplement it with another policy, even from the same company. And all right, that one will have an exclusion rider on there if you qualify for coverage. And if you don't, it's going to be the best policy you can ever get that you would normally never qualify for. So I'll take questions, but what are my takeaways? You guys all work super, super hard. Like, you really should protect the investment you've made in your career. Every individual is different. Insurance is not one size fits all. That's why a spreadsheet doesn't work. You know what's important to you. I don't, unless I ask you questions. And like you would never go to clinic or you would never go to surgery without a surgical plan. Not everything in life is in our control. Like I can tell you without fail, people do not plan to fail, but they certainly fail to plan. Not everything is in our control, although we love to think that it actually is. Like bad things happen to good people. It's what you've set up before the bad things happen that really make all the difference in the world. So I'll take questions or comments, but here's how you find me. I'm pretty easy to find. Phone number 516-677-6211. Email is lkeller, L-K-E-L-L-E-R, at physicianfinancialservices.com. Don't be afraid. I'm happy to work with you. I'm happy to give you all the advice that I can, even if it means I'm not going to sell you anything. If you have a policy that you want reviewed, if it's great, I'm going to tell you it's great. If you want to know if there's a GSI plan in your hospital, I know that. If you want to know the name of the agent that has it, if I can't offer it to you, I'm going to happily give that to you. So use me as a resource. That's really what it's designed to be. And that's really why I partner, with websites like Prudent Plastic Surgeon. A first impression is great, but once you blow it, the odds of you being able to like unscramble the egg is not good. And here's my final tip, and this is a Guardian specific tip. So let's say we go on to my example. Alan was so happy. He did his residency at NYU. He applied after his intern year because he was too busy. He didn't apply to Guardian. He applied to another insurance company. And unfortunately, he got declined. But Alan is an education junkie. And he's going to go on and he's going to do a fellowship. And the fellowship that he's going to do is not at NYU. He's had enough. He's moving on to University of Buffalo. Well, believe it or not, that's another Guardian GSI hospital. And now that he's not a new employer, my Vegas rule holds true again. So even though you were declined as a resident at NYU, you get a fresh start at University of Buffalo. And even though you were declined, you are now eligible for the GSI plan once again. So if you're doing multiple fellowships, and you were declined in your prior fellowship or in residency, you might be eligible for what I'm going to call the resurrection. So the rules are really important. And I will tell you, there's a lot of people in my industry, there's a lot of people, unfortunately, that have huge conflicts of interest, and they really cannot manage them well. I've been doing this a really long time. Everyone's got conflicts, but I sleep really, really well at night. And at the end of the day, it's all about you guys. And if I do that, then ultimately I'm rewarded for my effort. So it's all about you, and I'm just hanging on to your lab coat tails. So if you've got questions, you can throw them in the chat. Jordan can field, the questions, and I'm happy to answer them. So thank you guys. I really appreciate your time.
Yeah, so you have to, sorry, I'm being a little rude. You have to work at a hospital as GSI. So like somebody that's not in a resident, is this available for older physicians or?
Yes. So it's not going to be all places. At some of the larger hospitals or some of the larger employers, you might find them. Now, typically, there's going to be a company called Unum, UNUM. And a lot of times, if the hospital has group insurance, so your typical like slide number one, 60% of salary with a $10,000 or $15,000 maximum, they might say, well, Alan, you are covered under, the Unum group plan, but we make available a supplemental individual policy that is discounted on a guaranteed standard issue basis. And you can take that and you can buy that individually. It's a portable policy. Your worst case scenario is it has a pre-existing condition limitation. And it might say something like, when you buy this policy, we're going to look back 3 months prior to your policy's effective date. And if you saw a physician, you took a prescription medication, you were having symptoms that a prudent individual would have sought treatment for, and you file a claim within the first 12 months of owning this, we're not going to pay that. But after you own the policy for 12 months, even pre-existing conditions are covered. So they are available. They're just not quite available to the same extent these days as residents or fellows. But if you're in a big hospital, a big multi-specialty clinic, a big practice, there's definitely a chance. The other thing that you might find is if you're an owner of a practice and you've got other physicians that you work with and partners, you could
Yeah.
potentially establish a group insurance plan for your practice, or maybe even a guaranteed standard issue plan for your practice. And it could be employer paid. If it's employer paid, the limits are going to be higher than something that might be on a voluntary basis. But I'm happy to chat with you offline. And, if I know something exists, I'm happy to tell you that it does exist.
Thank you.
Yeah, thank you, Larry. I mean, that master class is always, and I think you covered so much. A question that I have with some of these newer types of policies that some of the big five, et cetera, are coming out with, like the enhanced definition by Guardian. Let's say
Mhm.
there's someone who already has a policy from previous from another, you know, another company. Is there a way, can you add that on or change? Is there a way to gain that benefit when these newer sort of definitions and stuff come out?
Yeah, absolutely. And you could do it any number of ways. So it's still common today. It's not as common as it used to be. So believe it or not, if I close my eyes and I go back, even 10 years ago,
Mhm.
you know, there was a period of time, I'll call it the dark ages of disability insurance. So from July of 2001, there's my encyclopedia mind, until May of 2006, if you were a surgeon, there was only one company that had own occupation up until the age of 65, and it was Standard Insurance Company, the same Standard Insurance Company that exists today. But back in that period of time, the maximum monthly benefit, no matter how much money you earned, was 10 grand. And then another company might come in and say, well, Jordan, if you got 10 there, that's the issue limit. But we're company B, we'll participate up to 15,000. That means another 5,000 could be available to you. Well, now the maximum monthly benefit for physicians is 30,000. So you might find that you've got a whole bunch of different policies on top of each other to allow you to get to these higher limits because your income and other coverage allowed for that. So what do? One is you keep what you've got and you supplement it. Another one is, hey, I got my policy. It's not even own occupation. I don't think that this is something I should have. Let's look at alternate options. Let's see what the cost is. Let's see what the benefit is. Does it make sense? And if the answer is, well, yeah, it makes sense and it might be a little bit more expensive and I'm willing to pay for it because I'm getting value, you can do that. You might also find, what, it's not great, but I got this thing 15 years ago. My rates are so good. I'm 15 years older. I'm not nearly as healthy as I used to be. I'd be like, Jordan, just keep what it is that you got. Now, the tip here is if you are trying to replace an existing policy, you never want to cancel what you have until your new policy is approved
Mhm.
and active. And the insurance companies are smart. If you tell us, I have company ABC and I'm now buying company, XYZ, and we're offering you this benefit based on the fact that you told us you're going to get rid of your existing policy, you're going to sign off on the fact that you're doing this. And if you don't do this and you told us you were going to do this, we're going to offset and we're going to reduce the benefit that we would pay you based on the coverage that you told us you were going to replace and you never did. Same thing is true if you go to a hospital that has voluntary group coverage. I'll use NYU as an example. They have a base level of coverage. Ironically, it's the same level for residents, fellows, and attendings. And then they've got multiple supplemental buy-up options. So if you tell me, I'm just going to take what's provided, I'm not going to do any supplemental options, and you sign off on that, and then you subsequently enroll in a supplemental option, we're going to offset for that. And you did something that you shouldn't have been doing because you told the insurance company, I'm not going to do this because that's going to prevent an overinsurance situation. Does that help?
Yeah, that makes a ton of sense. Yeah. Well, Larry, I can't thank you enough for coming on and sharing all of this great knowledge. You have your contact information up there. I definitely encourage anyone who has questions about their existing policy, or if you're looking for your first policy, to reach out to Larry, to learn more and see what's out there. Thank you everyone for watching, and Larry, we'll talk soon. But thanks for
Awesome. I appreciate it. Have a great night, guys. Thank you for your time.
thanks, Larry. Thanks, everyone.